following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, boys and girls, it's winter time here in the desert, so we're going to have a little fireside chat this morning. We're going to go back into January of 1991. My office was in Pismo Beach, California, and I lived in San Luis Obispo. That was about a 9-mile drive, took about 10 minutes. And every time I needed gas, I would always get gas in Shell Beach, which was right before Pismo Beach. There was a Shell station there. No, they don't mean the same thing. Anyway, I'm getting gas, and right next to me pulls up another car. We had a little sports car, of course, and the guy in the sports car was a Army man. And I looked in the back of his back window, and I could see that he was a full bird colonel, and he had all his dresses out there. And I said, where are you going? He said, pretty far away. And I said, I'm a commodity trader. I said, you got any good information for me? He said, yeah. He said, don't be short crude oil. And I said, okay, thank you very much. And I went on into work. That was sometime in early January, right after the first of the year. On January the 17th, 1991, in the middle of the night, it was actually midnight in Baghdad. It was 4 o'clock in the afternoon in Pismo Beach, California. We started Desert Storm. General Schwarzkopf was a firm believer in Sun Tzu and the art of war when he went to the West Point, and he was really big into this. And that's when the Navy SEALs came in and planted all those lightning bolt type lasers that gave targets to all the planes. And so the war only lasted probably, I think it lasted 24 hours. They didn't really finish it till a month later when the ground troops came in, but it was really over after that first 24-hour period. Now, as we came into that, we were looking at a Gartley pattern in the Dow Jones Industrial Average. We were looking at a butterfly pattern in gold on the sell side, and also a butterfly pattern sell side in crude oil, which was at an all-time high at $42 a barrel, coming off its low a couple of years before at $11 a barrel. But it was so bullish in crude oil that you actually had to get permission from your commodity house to go short. It wasn't the fact that you had enough money in there. You actually had to get permission to actually sell short, which was really amazing. Well, when the thing happened the next morning at 4 o'clock in the afternoon, all the lights started, lighting up all time, in downtown Baghdad, and we could see a big war had started. I was getting my hair cut in Tucson, in Pismo Beach, and my daughter was working with me at that time, my daughter Jill, and she called me up and she said, Dad, she said, are you still, short the crude oil and short the gold? And I said, yeah. And I was also long stocks. We didn't have overnight trading then, folks. Officially, you could get prices, of course, but to trade overnight, it was very, very difficult. But I said, yeah. And she said, well, don't lose your day job. And I said, why? And she said, well, turn on the TV. So I asked the person who's cutting my hair, I said, change to CNN. And of course, we could see that it looked like fireworks going on over there, and the war had started. So I finished my haircut and went back to the house. And I called the night desks in New York, which I'd been using from my old Drexel days, and I couldn't get through for hours and hours. I mean, it took me probably 4 or 5 hours till I finally got through, which was about 9:30, 10 o'clock at night. And I knew the guy on the line, and I asked him, I said, Marty, what the heck is going on? He said, Larry, he said, you won't believe the prices. And I said, oh, boy. I said, give me an idea of what's going on. And he said, well, I said, start off with the gold. And he said, gold is limit down, $50 an ounce. And I said, you're kidding. I said, how about crude oil? He said, there are no bids in crude oil, Larry. And I said, well, come on, it closed at 42. There's got to be bids at 39 or 40 or something. He said, Larry, we don't have any bids at all in crude oil. Nobody's buying it. Crude oil opened down $11 a barrel that day. And it was on its way back to $11 a barrel that it made later on in January of 1991. But the reason why I'm giving you this story is, folks, when everybody gets lined up on one side of the cart, things can really be, yes, Mr. Z, that's right. She's the one that used to cut out the butterfly shapes and hand color them and put on the refrigerator. She sure did. But anyway, the reason why I'm saying this is that when everybody's lined up on one side of the market, boy, it gets really, really scary. And we had something happen yesterday in the market that is absolutely unbelievable, and that's why I'm bringing this story to you today. The first chart we're looking at today, of course, here is the German DAX, and as you can see, we have this three-drive pattern that we're looking at with the ABCD. All of that looks really interesting. You know, sometimes these patterns work, sometimes they don't. But the one I wanted to show you here is this one right here. And that is, we're going to go back into look at this time period in 1991. And what you'll be able to do is you'll be able to see a little bit, because I can't blow it up enough because it's pretty hard to see. But if you'll notice that time in January of 1991 where the red arrow is, that's a gap in the Dow Jones. We gapped up that day. I believe, as I recall from memory, the Dow was up almost 8%. Well, we were coming in at around, I forget where the Dow was at that time. It was, somewhere, I don't know, probably in the air. Well, it shows you right here. Somewhere under 5,000 is where it was. It was 4,800 or something like that. And we left a gap there that's never been filled. That's the only gap that we have in the Dow Jones that's never been filled. Now, I bring that to your attention because we had something really interesting happening yesterday in the Dow Jones Industrial Average. And if you'll give me 1 second, I'm going to share that with you. So hold on, and I will bring it up to you. I'm saying that as I'm searching, but right now I'm not finding it. And I had it all ready to go. This is not a good sign. I found it. There we go. Here's what we have going on right now in the Dow Jones Industrial Average. There it is. You'll see that we gapped up yesterday. We actually left a gap. Can you believe that? In the Dow Jones, we didn't quite make 20,000. I don't think 20,000 means very much, but we're over this full moon. We have a CD expansion, 1.27 of AB. We also have a Bradley date coming in here. So just be really careful being on the long side in here, folks. There's a lot of things that could happen, and the steepness of this curve, as we know with Isaac Newton's law, anything could happen. We got the Fed today, and it's near certainty. Nothing is certain, but it's near certainty that they're going to raise rates probably a quarter to a half. Now, the big surprise would be, is if they didn't raise rates at all, I think the market would really come unglued if that happened, because that means there's something out there that they're really scared of. The second thing would be is if they raised it more than 0.25% to maybe a half. That would say that the rates are going to start accelerating, rapidly, is the way I would take a look at that. So anyway, watch these. I've got a few other charts here that's interesting. We're going to have Mr. Anderson, Rich Anderson, Anderson Capital Management at the break. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
The holiday season is here, and TFNN Salvation Army Tiger Dollar Special is back. Right now, you can get a 25% bonus on your purchase, and 10% of whatever you spend will be donated in your name to the Salvation Army. The sale only comes around once a year, so don't miss out. Tiger Dollars are a great way to add extra savings to TFNN newsletters or services, and they never expire. Get your Tiger Dollars before the sale ends Thursday, December 22nd, and get your 25% bonus while donating 10% of your purchase to the Salvation Army. For all the details, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, there's another part of this story about the Desert Storm War. I had a very good friend, one of my students, John Pinnell, down in Houston, Texas. He actually was in charge of hedging all of the oil from the Alaskan pipeline. He worked for Goodyear Tire and Rubber, and they were the ones that owned the line that had all that oil, so he was in charge of hedging it. And he made a fortune by using the options market. And of course, with prices at $42 a barrel, they were making a lot of money. He got a memo 1 week before January the 17th, right after the first of the year, a memo from the chief financial officer telling him to suspend all hedging operations and only trade oil from the long side. John called me up and asked me what he should do, and I said, write a letter telling him that that's absolutely the wrong thing to do because we make our money on these volatile type spreads, and this is what we have to do. We have to have these in place, otherwise we're going to lose a great deal of money. And the CFO sent him a letter back. He said, I understand your position, but the situation in the oil market is such that you cannot be short oil under any circumstances. And so he had this letter in hand. And guess what? When the proverbial stuff hit the fan, guess who they tried to bury everybody with? And that was John Pinnell. And he pulled out the letter. And he said, boys and girls, he said, here's what I was told to do. I asked several times to suspend this, but nobody would listen to me. And, of course, the CFOO ended up going bye-bye. And unfortunately, they had to blame someone, so they blamed John along with the CFOO. So John went on to do a great deal of wonderful work in his own trading goal. But it was really an amazing situation that occurred. When these people do. It brings back that book that I keep on my desk, How the Experts Think and How They Speak. And so just because someone's an expert, including me, I'm raising my hand, folks, I hope you can see it, you have to pay attention to what you're really looking at and handle the risk of what you're watching here. Now, since we're talking about oil here, let's just take a quick look here because this is something that we brought to your attention here over the weekend, the fact that we had a really big chance for a breakout here in the oil market. As you can see, we did break out in oil. There is no question that's what we really did. The problem is everybody that's bought oil now over the past since Sunday is now underwater. this is not a good sign. If you'll take a look at what we were watching just yesterday, when we saw this 1.27 expansion to the upside, we're now trading below that old support level at the 5200, 5250 level. That's not a good sign. Now, there's another gap to be filled down there at the 5175 level. That will be a very, very important one. So you'll need to watch that very closely if you're in the oil. And that'll also be a nice ABCD over the time period between the 12th and the 13th of December. But this is it's got all the earmarks of a false breakout. It had every chance to keep going, but everybody that bought it Sunday night and everybody that bought it on Monday and Tuesday are all underwater now. So that's not a good sign. So keep an eye on that. There's always that possibility to see how it's going to hold up at these levels. Anyway, we'll watch it, also very closely. Another one that we need to talk about here is the fact that they're talking about the big bull market in Asia. And folks, I don't know what those people are seeing over there, but if you take a look at these charts, just looking at the Hang Seng here, you'll see that the Hang Seng, opened 200 higher last night, basically closed unchanged, right on the low of the day. This thing is in a downtrend. It's been in a downtrend ever since October, so it certainly doesn't look very, very bullish. And if we look at, one of our largest, exporting and importing competitors, if you'll take a look at what's happening in China, you're seeing the same thing. Now, this is one day behind because we had a big move down Monday and Tuesday in the Chinese market, but this has been heading down off of that 61% retracement from the October highs. None of these markets, whether they're the emerging markets or any of the others that you look at, and we'll take a look at the emerging market here, none of these have followed through like we have in the United States. I mean, it's just been the U.S. market that has been going, totally wacko to the upside and breaking all kinds of records. And so anyway, watch these. This is all I'm telling you. You've got to put a little bit of flavor of what's happening around the world on all these things. We've already seen the DAX and some of these others. It was the same thing as we're seeing in the FTSE and most of the other things. Now, when we talk about this dollar index, we know that we're in this really strong area of resistance up here at this 52 level. We've been up and down here for the last few days based on what that euro's been doing. And with the Federal Reserve out today, they come out at 2 o'clock Eastern time, 2:15, I believe. Chairman Yellen will be giving her little speech, telling her what's going to happen. Frankly, folks, the Fed has lost basically control of the market. In my opinion, they had several chances during this run to push it. Why they didn't do it is beyond mystery to me, because rates have been going higher. If you look at that bond chart, they've been going higher since July. And now we're looking at this. We'll see, what's going to see what's going to happen. Yes, there's a possibility the Dow could go to 23,000 or 24,000 or 25,000. That is always a possibility. But it's going to have to get through 20,000 and stay there before the first part of it gets moving. But we've had this tremendous run. We've left a gap in the dollar, and whether that's going to be Terry, you must be from Colorado where they have a legalized marijuana. That won't be in my lifetime, pal. I can promise you that. 50,000 in the Dow. Yes, 60. I like 60, bid 70. Anything's possible in these markets where you have quantitative easing, that's for sure. So we've got to pay a particular attention to these at all time. But the main thing we're trying to talk about here is some of these markets that seem to be really, really tradable. But we are seeing a lot of unique patterns going on in these markets with these ratios that we look at that are so important, which happen to be, of course, the 618 and the 1.618 and stuff like that. I wanted to share with you, this is what we were looking at here, because you're getting down near this $50 barrel. This is what we talked about yesterday. And you'll notice here that if we get down to that $50 barrel, that's going to fill that gap that we had in here. So we need to watch that very, very closely here in the oil, because it still can be bullish. We had that big run up, and now all we're having is that little pullback, and we'll be able to see, how it's going to to be what is going to happen. We'll see if this is going to be something significant in the crude oil. The fact that it's reversed gives the first sign that we're watching a market that is certainly has all the earmarks of a possible false breakout to the upside, because it had every reason to go. All the bullish enthusiasm. We also had the the good news coming out of, the non-OPEC countries where they're cutting back production too. So that reminds me of what happened in, 1991. Just because all that news is bullish, it doesn't mean that it's going to go in that direction. So just pay particular attention to some of these things, because they're very, very important. I still believe that whatever they do today with the Fed, I still believe we've already had a really nice rally in bonds already. We've already rallied 3 handles off the bottom, which is pretty good. So if you get a good break in bonds today, about 1 or 2 points, I would think it would be a buying opportunity. So that's what I would be watching today. Stay tuned for Rich Anderson, Anderson Capital Management.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, with our good friend Rich Anderson of Anderson Capital Management. Rich, how you doing, buddy?
Doing good. Good morning, Larry.
Hey, listen, we have a couple of questions. Do you have any thoughts on copper, what it's doing? I know we went up to that 274 level, and we've been between 270 and 245 for a while. Do you have any feeling on that?
Yeah, I actually, our good friend focused on copper this weekend, last night, actually.
Ricky the Rocket?
Yeah. my basic feelings, but of course I'm not going to divulge his information, but my basic feelings is copper has a PhD in economics. Okay, so when we see copper strong, we see the world economies, not the U.S., but the world economies getting better. We've had a huge run-up since, October on the weekly charts when we've gone vertical. It's typical to have some kind of a correction, but I think we're going to eventually work higher. At the moment, the bears would say it looks like a double top. I think that might eventually look like an ascending triangle. In any case, as long as we don't have a trade war with all these countries, and they use some subtle finesse in dealing with trade negotiations, I think the whole world could start to pick up. And that's what you've seen. It isn't just copper, zinc, iron ore. The gamut has started to improve. 3 weeks ago, Goldman Sachs and Citi, I think, have both written articles about commodities look like the place in 2017. And you can't underestimate how much taking off some of these presidential directives that have clamped down on this industry and that industry will just lift the business climate here. Heck, even in England, where they've got Brexit that they have still to deal with, things are going fairly well, and it can turn out to be a big plus for Britain, number one. And since they're the biggest customer of the EU, they're gonna work things out. They're gonna scream and yell to the public, but they're gonna work things out, and the whole world could start to do quite well. And that's what copper's telling you, and that's why these people are getting into base commodities: iron ore, zinc, lead, aluminum, copper, things that we don't follow very much or trade, but they go up and down just like all the markets we follow and trade.
Amen.
You got to pick the one. You got to pick the ones you're going to be good at, and believe me, in a lot of those markets, there's a lot more control than you'd like to believe. Mm-hmm. And it is
now,
not.
Rich. You sent me some information about the rebalancing in some of these commodities. You want to discuss that a little bit? We're going to be talking about cattle next, of course, but why don't you talk to the folks about what's going on?
Well, see, that was an article about take the Goldman Sachs index, and it's X number of commodities. And at the beginning of each year, they kind of balance it, right? So let's say they all have 10 units of equally balanced. But then something goes up 50%. Well, now their 10 units are worth 150 units, and something goes down 50%. Now they're only worth 50 units. So you've got to buy a whole bunch more of the ones that have gone down and sell off some of the ones that have gone up. Now, you do this over a 5-day period of time so as not to distort the markets very much. But in certain markets that have gone down this year, I mean, all you have to do is look at the charts. The markets that have gone down are things like hogs were number one, and cattle would be one. Well, they have to buy more of those contracts to rebalance their index. And this is done by prospectus. Anybody that really wants to get into the weeds can go to the CME and read the prospectus of the Goldman Sachs contract. But in a small market like cattle or hogs, where they're buying X number of contracts, and even though they split it up over 5 days, it becomes a fairly large portion of the trade. And so that is what will occur during the January, say, let's see, I have a January map calendar. I don't, but anyway, January, say, whatever the first Monday that we trade, and through that Friday for 5 days. And small markets, you've got a lot of contracts to buy, but everybody knows about that, and that was written some time ago. And you've seen the hog markets have come back up some, cattle markets have come back up some. So they're constantly moving things, and they'll adjust those things as of X date, and then in January, in that first week, they'll execute them.
couple of our listeners certainly want to thank you for the hog call that you made a couple months ago. Well, it's about 5 weeks ago when hogs were under the cost of production at $44 a pound. They hit $42.50 and have since rallied 13 cents a pound. So where do you think cattle and hogs are going from here? The cattle are acting pretty bullish.
The cattle were acting pretty bullish. Right now, first of all, these hogs go off the board, I believe, today. It's the 10th business day of the month, and I believe that might be today. In any case, I would expect to see the February hogs work their way back towards where the December hogs are. And February hogs are 61.35, and these are 57, so you can easily have a 4-cent correction. On a weekly chart, that'll look like just a very normal correction, won't be any big deal. But that's kind of what I'm looking for in the hogs, is for them to trade back down into that 57, 58 level where the these go off the board. On the cattle, the same thing. I'm still looking for a correction into the, say, 105, 106 area. That would be on the nearby D's. If the D's go off the board, then you have to adjust that number up slightly for the Febs. The weather is the recent rally that we've seen in the cattle is due to the cold weather forecast that came in. And, as you know, when it's really cold, those animals, they're outside for the most part. There's a few in confinement, but the vast majority of cattle are outside. Use almost all the energy they can create from the feed that they're eating just to stay warm. So instead of gaining, 2.8 to 3 pounds a day, they're gaining 1.2 pounds a day. Mm-hmm. And that's helps cause this rally. The hogs, I believe, this is a time of the year. There's no secrets about this. This is a time of the year when people buy hams for Christmas. So the ham market's always strong, and then all of a sudden it'll break because the retailer has already bought all the hams they're going to buy, and they have to buy them a couple weeks early in order to get them in the store for you to buy them, when you go to the grocery store. Mm-hmm. So, these are just normal seasonal things. No, not really any different than full moon and new moon or, it's, summer, winter. Those are just cycles within the cash meat markets or what happens to cattle when it gets cold. And then if the weather forecasts were nice, the bean rally recently was on a forecast of dry weather in South America. Then we had this break that we're seeing now, forecasting some rains that are a week out, and if they don't verify, I'll let you go. You got to
take a little break. We'll be right back with Rich Anderson of Anderson Capital Management.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber
as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, with Rich Anderson of Anderson Capital Management. Rich, the next chart that they've asked us to take a look at here in the den is the chart for sugar. This is March sugar that seems to be breaking down quite a bit. Do you have any feelings on this?
Well, the sugar had a rally last week on the idea that the biodiesel credits would be a possibility of making sugar much more valuable than it is. And then the announcement of the EPA director kind of squashed that because he isn't necessarily a biodiesel-friendly kind of a guy, being from the oil industry kind of thing. So, but nevertheless, we have potential problems in South America with the sugar crop, and we have pretty good demand probably will reappear here shortly from India. So I'm actually looking at pullbacks to have as opportunities. That's, by the way, one of the big markets that went up last year are natural gas and sugar and crude oil. So those are markets that will, between the 9th and the 13th of January, they don't do it the first week of January because people are still getting back from holiday and have to sober up, shall we say. So the 9th to the 13th, well, you know what I mean. You got to get your computers going again, the whole deal.
Sure.
So the ones that have gone up the most last year were like sugar and natural gas and oils, crude. But those are big markets, so that doesn't influence them very much. The ones that have gone down the most last year were like wheat and corn, which are still big markets, but cattle and hogs went down a bunch, and they're not very big markets, so that's why we had that discussion about between January 9th and the 13th. The traders know this, so they'll front run it a day or two early and try and take advantage of it. But the funds are pretty sophisticated, and they know how to blend it over months. But I would have to say that I would look at the technical pullbacks, and I'm bringing the chart up.
Hey, Rich, I want to ask you a question. Use your memory bank here. Do you remember back in January of 1991 when we had the Desert Storm War? Did you have any stories about how wild the markets were? Because I remember crude oil opened down $11 a barrel. Gold was down $50 an ounce, and we had some of the biggest moves we've ever had in stocks. Do you remember that vividly? Because I certainly do.
Right, I remember that. I was walking into the club, into the flagship. You've been there,
Yes.
which is in Eden Prairie, and I got to the desk to check in, and I see on the TV that they're starting to do some bombing and stuff, and then I of course, just like an election night, I went immediately back to my computers for opportunities. And what we didn't know at the time is that they had already gamed this with the leading executives of all the major oil firms. The Department of Energy brought them in and said, if this happens, this is what's going to happen, and this is what could affect, the oil market, but it won't have any major impact. It'll just be minor. And so the oil companies already knew this. So the reactions in the market, were very short-lived because they'd already game theoried this out with the principles of the major oil companies. Just like in '87 in the crash, that Monday morning, all these brokerage firms except one were bankrupt. But the Federal Reserve had a meeting that night with all the, the guys, the chairmen that ran these companies, the brokerage companies, and said, we're going to keep the window open and you have whatever it needs. So they had carte blanche to go start buying even though they didn't have any money. And one of the reasons they didn't know how badly off they were is we didn't have electronics back in those days like we do now, so they hadn't cleared all the trades, so they didn't really know how deep in the hole they were.
Yeah, I know.
It's no different than in January of 1980 when the silver was at the highs and the Hunts had been squeezing it. 11 of the 12 members of the PIC committee were broke. But they had a meeting and said liquidation only, and that's how they got all their money back.
Well, they also said 200%. They also raised it to 200% margin, remember?
Right. And so that's why you have to be a technical trader, because there are things happening that we aren't going to have access to. We aren't going to know about until after the fact. But the markets will tell you by the market action. Mm-hmm. But when
they can't hide from me, that's for sure.
That are coming on the future that may have an effect, we'll call them technical fundamentals. It's important to know about those as an understanding why your market could have a bigger move.
Let's take a quick look here at the soybean market and March soybeans. We're in a little bit of a correction here since late November. I'm still sort of friendly to beans. Do you feel that same way, or what's your feeling on beans?
Well, there's a massive crop that's trying to be planted and grown in South America. Mm-hmm. And if they have crop problems, we could maybe revisit the $11 or whatever. I personally think, a pullback of, say into the 10.08, 10.10 area. That's kind of what I've been looking for. I was selling them 3-4 days, what was it, a week ago at 55, 56. It's kind of like the July-November bean spread. If they grow a big crop in South America, the July-November bean spread is not worth what it's at now. It's worth a whole lot less. Sure.
Do you ever see soybeans going back into the $7 or $8 area?
If we had a big crop in South America and then a big crop in this country next year, and we had a bumper crop last year, and you do not have a bumper crop every year. People need to remember that, particularly the farmers that are spending money, when they have a bumper crop and then they're not saving any for the years. You could see the beans get into the, low 8s, I would think. But we've got too much weather concern for right now. And if this forecast doesn't verify and they don't get the rains they're expecting in South America, that'll just make the dry guys that much more boldened, and we'll see these soybeans, revisit their highs. But I'm personally looking for, what's that, another 20, 25 cents. Mm-hmm. But keep in mind, it's the holiday period, and these markets will pop back and forth because there's not as many people participating and watching.
Yeah, this is why we have liquidity is just a little less for sure.
Right.
I remember the days we used to didn't work in December. Other work just an hour or two. Do you remember that?
Oh, yeah, absolutely. And so I'm trying to remember that. I'm trying to remember that and not make those mistakes.
Yeah, that's for sure. Now, we had one other question. What's your feeling on this crude oil? We've had this big breakout Sunday night up to the 54.50 level, and now we've broken over $2.50 a barrel. Is this going to be a false breakout in your opinion, or do we still have more time to wait?
Well, there's, the shale producers in the United States are definitely going to be one of the swing producers, and when they can lock in prices over $50 a barrel, that's a pretty good deal. They'll make a lot of money, and they'll start opening up these wells left and right. I think your line in the sand is, I don't like the fact that we had this nice rally, and if we close on Friday down here where we are today, I could easily see us gapping below the 5130 and revisiting all the way back down into the 47, 48. And all we'll be doing is just in this giant trading range where there's lots of people making money and lots of people losing money, but it doesn't mean much in the total of things.
Mm-hmm. Okay, finally, the last question is about the Fed. What do you think will happen today with the notes and the bonds, and what the Fed will do?
They'll raise it a quarter, no question, but they'll probably have language that indicates they're going to raise 2 or 3 times next year.
Hey, thanks for joining us, buddy. We really appreciate it, buddy. Yeah, may God bless. Bye-bye.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're going to take a look here at this Dow Jones. Now, the problem with this Dow Jones chart, folks, this is the actual Dow Jones that does not trade overnight. You need the YM, the E-mini, because that market went all the way down. If you remember, we were down 800 points in the Dow, taking it down to 17,200. And of course, you know, we've had a little bit of a rally of 2,000 points since that time. That would take it to the 1.618. But this is a different chart because it doesn't have the overnight trading. That's part of the problem you have when you don't have electronic trading, is you don't see all the action that happens overnight. So this is one of the reasons why you need to use the Dow E-mini along with the the Dow. But this is the same thing we're watching. We've already posted the charts for these things, so there's nothing unusual about this. But as you can see here, we are up into this area. We did leave a gap yesterday. We haven't taken out the low of that gap yet, but it'll be interesting to see what happens. Now, if you should close just on the low of the day, down around 19,825, I believe, and don't go below that level. And then if it were to gap down tomorrow, which would be almost nearly an impossibility, I guess they'd have to have a recall on the election to get anything to change this market. But we are over this full moon that is usually a pretty strong indicator for the cycle. One other thing, we did have some interesting information from our good friend Norm Winsky from AstroTrend, and that he is in a sales zone here. And so I thought I'd bring that out. And I bring it out for two reasons. One is we'll be able to blame Norm if it doesn't work. Oh, what a great idea, Norm. Thank you for telling us this. So if it doesn't work, we'll let Norm answer all his questions. His phone number is 555-5555. So just you'll reach him at that line. But he did have a sales zone area today in the Dow Jones and also the S&P. So we'll see. And Norm has been pretty good, folks. He hasn't been. That boy is. He's got all his ducks lined up. That's for sure. But this is probability. Sometimes they work, sometimes they don't. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.